All right, today we're digging into a pretty fascinating and crucial part of infrastructure financing, the Capital Completion Assurance Guarantee.
Yeah, it's one of those things that sounds technical at first, but once you get into it, you realize how much it can impact whether a project even sees the light of day.
Exactly. You know how many projects just never make it past the halfway point? This program is basically built to stop that from happening.
It's like an insurance policy on your project's success. Except instead of paying out when things go wrong, it's designed to make sure things don't go wrong in the first place.
Right? And the name says it all. Capital Completion Assurance. The core idea is simple. Guarantee the project gets built and reaches commercial operation date.
So walk me through this. How does someone actually get started with it?
Step 1 starts with an application, takes about 15 days. You submit your project, include the RWA letter, budget info, and all the required documentation.
And if something's missing?
Then the project owner just resubmits after fixing it. The goal is to get all ducks in a row before pre-approval is sent to underwriting banks.
Makes sense. Once pre-approved, what happens?
That's when we bring in the SPV, special purpose vehicle. Think of it as the container that holds the project assets, equity, and financing.
So basically, you're financing through this SPV, not directly to the developer's company?
Exactly. It creates separation and keeps things cleaner legally and financially.
And there's a due diligence process, right?
Yep. Takes another 30 days. If needed, site visits happen and all the agreements like loans and equity deals are signed.
I remember you mentioned equity. How much does the program usually take?
Usually up to 30%, and it's a carried interest. But the project owner always keeps the majority stake.
Okay, now we're into the third phase. That's where things get real, right?
Yeah. The real action starts with executing contracts, EPC agreement, loan, share purchase. Then the issuing bank sends out the bank guarantee.
That's via SWIFT, right? And a hard copy too?
You got it. Once that's done, you hit financial closing, and the first capital draw happens about 45 days after.
What if something goes wrong and the funds don't come through?
Then the issuer can unwind the guarantee, pull it back before any funds move. It's rare, but it's a safety valve.
And what if the developer just walks away from the project midway?
Well, there's a whole process to try and resolve delays. But if it's totally unresolvable, so like fraud or abandonment, then yes, the instrument could be called.
But only for the amount that's been drawn so far, right?
Correct. You can't call more than what's been used. That protects everyone.
What happens once the project reaches commercial operation date?
The guarantee expires, equity gets distributed per the agreement, and then it's on to repayments and revenue sharing.
So the equity sits in escrow during construction?
Yep, it just keeps things organized. Once completed, it's released and distributed proportionally.
Let's back up for a second. What kind of projects can even use this program?
Projects above $25 million, almost anywhere in the world, just not in sanctioned countries like Russia or North Korea.
Any limits on sectors?
As long as they're not environmentally or socially harmful, it's a green light.
And the developer needs to bring what? 50% of the budget value in a standby letter of credit?
Yeah, for a $100 project, you'd need a $50 bank guarantee. Bring more, and our equity interest might go down.
So that part's negotiable?
Totally. The share split, the loan agreement terms, everything gets negotiated up front.
And then it's rinse and repeat each month with the capital draws until completion?
Exactly. You follow the draw schedule, build the project, commission it, and once you're operational, the guarantee expires and you're in business.
It really sounds like a smart safety net. You're not just throwing money at a project, you're managing risk and ensuring follow-through.
That's the whole point. No one wants to fund half a bridge. You want cars driving across it.
Hey, fair enough. So what's your final takeaway on all this?
If you've got a viable project and the right paperwork, this program could be your ticket to full funding and actual completion.
Yeah, and if you're serious about getting it done, the system's built to back you up. As long as you're ready to play by the process.
Couldn't say it better myself.